All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above. All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
What is going on, ladies and gentlemen? Hope you guys are doing well today. Happy weekend, happy Saturday. Where are you guys from? What pairs you guys looking at to start the week? I want to know everything. Always like to start off seeing where people are from around the world, getting to know what you guys are looking at for the week. I'm actually going to try to fix my camera here. Let's see. 1 second, guys. Sorry, I am not prepared this morning. There we go. Beautiful. All right, we got Cali, we got Canada, we got Jamaica. Awesome. GBP CAD US 30. Very nice. Awesome, awesome. Let's see what kind of pairs I have. GCAD. It's actually not on my list today, but I'm looking for further strength on the pound. So definitely buy GBP XXX and looking to sell at EG as well. Good morning, Hugo. Nigeria, Australia, South Africa. Awesome. Good to have you guys on today. AUD USD. Oh, yeah. We're going to be talking about AU today. I got my coffee ready to go. We'll get started here in a few minutes. As always, just want to wait for people to trickle on in here and give people the opportunity to kind of get settled in. This won't be as long of a live stream, so don't worry. It's not going to be like a 2-hour live stream that we're typically used to. It's going to be about an hour, hour and a half at most. I'm just going to go over the pairs that I have. It's not as much as last week. However, we do have some really nice setups forming, so I do want to discuss everything with you today. For those of you who are preparing for from automation, I know that is still going on. We are starting our signals on Monday, so very excited for that. For those of you who already have your funded accounts, congratulations. For those of you still in limbo or still waiting, I guess, just give it a few more days. We have to just take care of the minimum trading days, and you'll be all good to go. So speaking of that, guys, if you want a guaranteed funded account, I mean, who doesn't want a guaranteed funded account? We do that for you. We guarantee you a funded account or a full refund, and if we somehow fail, we not only pay you back the cost of the service, but also we will pay for your challenge as well. And then you guys can use our signals. So essentially, the trade ideas, all the stuff that we're talking about on the live sessions and within the membership program, those are just education, right? That's for people who really want to understand the strategy, learn the strategy, and build this skill over time. Now, the signals that we're going to be providing within this prop firm automation service is going to be a little different. It's really strictly just signals, providing you guys with trade setups to help you grow and maintain your funded account. That's it, right? So if that's something that interests you, I mean, even 5-10% a month, right? We don't need to do crazy returns. 5-10% a month on a 100-200K account. I mean, boom, it takes care of your salary, right? Without you having to do anything. Really, you just copy and paste your signals. You already get a guaranteed funded account anyways. It's just about getting started. So all you got to do is get started, and we'd be happy to work with you. All right. We got GJ, Uganda in the house. Botswana, UK, awesome. Good deal. Nashville. We got EJ Shorts. Yep, I like EJ Shorts. Chicago. All right. Let's see here. All right, where else are you guys from? Keep blowing it up for another minute or two, and then we'll get started. See how many pairs I have today. I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Like 14 pairs. It's not as many as last week, but still a good amount of setups for you guys to take advantage of. And remember, these live sessions are just to help you guys with overall directional bias. It's here to help you, formulate some setups. This is not here for, teaching the individual concepts. I mean, yes, you will be indirectly taught the concepts through these live sessions. However, it's not meant to be a training course. It's meant to just help you with getting prepared for the upcoming trading week ahead. All right. Now we got Virginia, we got New Jersey, Morocco, Thailand. Awesome. Good to have you guys on here. All right. Let's see. I think we have had everyone pass. I think I got word this morning that everyone who has signed up for their prop firm account has passed. So congratulations to all of you who have done that. We're just so thrilled to have you guys have funded accounts. And we're really looking forward to working with you going forward here with these signals. And even if it's just 1%, guys, right? 1%. If you guys can do 1 or 2% in 1 month, you pay for the service. So don't be so, scared about, oh, it's a big investment. Well, what about the ROI in regards to the investment? That's why I'm doing it. I love this kind of stuff because it helps you, but it's also beneficial for everyone, right? Because it's not that difficult to just make 1 to 2% in 1 month's time. Pays for the service, pays for the challenge. You're essentially at that point risk-free. And then you have a funded account and then signals for life anyways. Joburg, South Africa, Cameroon. Good to have you guys on today. All right, we're going to go ahead and get started here. As always, I'm going to do about half of the pairs and then stop, take some questions, and then we will finish off with the rest. All right, so let's go ahead and get started here. Let's see. All righty. Share my screen. All right, can everyone see my screen here? I just have to make sure, just because I've had this happen before where I just start talking and no one can hear me. So just drop a yes in the chat. I'll check the chat in a second because I cannot see the chat when I share a screen. So if you have questions or anything, please just wait for me to stop sharing and we'll go over all of those questions together. Just drop a yes in the chat and then I will know to get started here. All right, cool. Yeah, Nathan Humphreys. Yeah, I've got minus 1 more trading day. Yeah. So you'll be able to start probably Tuesday, hopefully. Well, actually, you have to upload your KYC docs, which will take a couple of days. But anyways, perfect. So we have AUD USD here. And you can obviously, you guys can see all the pairs. We're going to be trading or talking about all the pairs highlighted in red today. Everything that's not highlighted in red, I have done a thorough analysis on, and I just don't see anything worth of value. So it's just not worth my time and your time going over it today. So all the ones highlighted in red, I do have setups for, I do have analysis for. So it should be plenty of opportunities for the upcoming trading week. And obviously stuff will form throughout the week. So those of you who are in our VIP program, you will be getting updates on all of our trade setups. So don't you worry about that anyways. But those of you who are not and just take advantage of the live sessions, no worries. We do have quite a bit of analysis here for you all today. So anyways, AUD USD, we are pushing lower, right? We in a bearish market, higher time frame, right? If we go to the 4 hour, right, we have not come into our level yet, right? We've been talking about this for quite some time now. 6,550 and 6,5 are our 2 levels, right? We haven't pushed into this higher time frame area of demand. Now we can see currently, I know it's blurry, I'm just zoomed out a little bit, but currently the trend is short, right? Even on the 4 hour time frame. So we've been short since the beginning of February of this year. So almost 2 months we've been pushing lower. So yes, technically this is counter trend trading, but this is a higher time frame counter trend. So we are able to take advantage of the counter trend opportunities, lower time frame trend short into our higher time frame objective points. So with AUD USD here, we can see that we have come down into a higher time frame level of demand. Now I went over this last Saturday, and I think I even talked about it last Wednesday on our live session. But this was the 2020 crash where we had this huge sell to buy and we had our repricing area of demand in here around 6.2. So at psychological level 0.62, we finally came down and we mitigated that level and then we expanded away from it. So if price is going to continue to go long, I do think that we should probably come back down into this region and fill up some more imbalance and come into at least this area of demand, right? This was the failure to generate the lower low. And instead we formed the higher high. In this counter trend, low, high, low, high, low, high, low, high. We failed and then we made that higher high, having reacted off of that level of demand. So we know that at least price should at least push into this level of demand before doing something, right? We're looking for shorts anyway. So if it just continues to short off, well, great, because that's our overall directional bias anyways. But if it's going to go long, then we want price to come down into this region of demand first. And we can see we haven't reached it yet. We have all this liquidity to run. All right, so scaling into a lower time frame. This is how we can determine our overall directional bias for the week, or maybe even for the month, just depending on how quickly it can move into here. So we're following the overall structure on the higher time frame. We are trading counter trend, right? It is against the trend. However, we haven't come down into a level of demand yet. So in that case, we can continue to short it with the current trend on the lower time frame. So where is our previous level of supply? Well, it's just simple. You follow each and every pullback, right? This is a level of supply here. This is a level of supply here. And this is just an overall retracement, right? This is not a failure to make a lower low and a higher high to where this is a break of structure. We should be looking for longs. This is the prior high that made this low. So this is the range in here. This is the trading range. So we can do anything we want in here. We can trade up, down, sideways, backwards, in a freaking star pattern. I don't care. As long as we don't break this high, we're still bearish. Okay. So we have come up into our previous level of supply in a lower time frame, so we can scale in. Right, where is that region? We've talked about this plenty of times, and our boy Tom actually discussed an opportunity from 6.7 to 6.7, and then I discussed an opportunity on the lower time frame right in here at 6.750. So we can see both the levels came into, price pushed into both of those levels, and we maintained our bearish structure. We can see our stops are above that previous high. I think we have the risk to reward tool here. Yep, stops are above the high. And we can just see these levels of demand, right? So this is an overall pullback, right? Higher highs, higher lows. We failed to generate the higher high. We made that lower low. So this is the entire range of this expansionary move. And this previous high actually came in to this prior level of supply in here as well. All right, so we have two lower time frame levels. We have this level of supply here, this level of supply here. We can see this is our last point of demand, right? Just like this is demand in here that we reacted from. This is demand in here that we reacted from, but failed to generate any sort of higher high. We rolled over and expanded lower. So at this time, that would be our level of supply that we're looking for price to pull back into that premium level to be looking for shorts, right? Because we don't want to be looking to sell at a discount. No one likes to sell at discounts, right? Everyone wants to sell at premiums and everyone wants to buy at discounts. You got to get the best bang for your buck, right? So just understanding that concept, you'll be much better off in terms of your entries, right? So we had an overall retracement. Price just kind of messed around a little bit. The price action was a little whack, to say the least, but we ended up rolling over. And the most important thing is we have come and we've broken structure. So I do think this is going to be some form of structure break just because of the fact that we're still bearish. We've come up into our prior level of supplies. We've swept liquidity and we've made our move lower. So just saying that, I do think that we can see continuation short for this upcoming week. So where am I looking to trade? Well, I'm currently break even on both of these trades here. I'm not quite sure what I'm sitting at the current time. I think I'm sitting at like a 1 to 5 on both of them in terms of collective profit. But in terms of continuations, we have a level of supply here and a level of supply here. Okay, so I'm just looking for pullbacks, whether that be just a very shallow retracement or just a deeper retracement back up into this range here for continuations lower. And we can see, you guys, I really shouldn't be posting the risk rewards just because we shouldn't really be going over signals here. But anyways, I forgot to delete them. So those are our two levels. And we are looking to take it lower into 6.5. For those of you who are currently in these two positions, or at least one of them, you can have a runner be held to 6.5. This could just be one of your take profits at 6.550. And we understood that just because this was that prior level of last selling volume in here, right? So we could see that reaction. It's also that psychological level. So continuations lower. We are below the 4-hour 50 EMA. We are below the daily 50 EMA. We can see that we are just about tapping into it here. So definitely continuations lower are expected. All right, Swiss franc, Japanese yen. So we talked about this before on last Saturday's live session. I'll quickly go over it again. I'm not going to get too much in depth with it, but essentially, we are looking for shorts. We are in a higher time frame uptrend, so we can't ignore that, right? I would prefer to trade this long. However, it's not in a position to trade long at this current time. Why? Because for one, we have relatively equal lows, and two, we are currently in a bearish downtrend. Okay, so we are continuing lower on the lower time frame short. So we are in some sort of pullback phase, right? We're not making higher highs. We're making lower lows and lower highs. Even though we are in a bullish uptrend, we can be looking for counter trend shorts with the appropriate criteria, right? So I would prefer to see something like a failure to generate a lower low and then some sort of structure break to the upside, closing back above prior market structure for pullbacks into demand to go long. That would be preferred, because at that point we would be trading with the higher time frame trend and the lower time frame trend in here. That would be overall preferred for me. However, I don't have all the confluences on board because we're trading against the higher time frame trend, but the lower time frame trend does provide a nice setup. But we have to understand, right, that just because we have a very beautiful setup and it could play out very well doesn't mean we can over leverage on our positions. We have to stick to risk management no matter what the setup is. And we understand that we are in a higher time frame uptrend. So if price comes back up into our area for shorts and we break, well, that's fine, because then that we could see this as more of a, pull back maybe deeper into this previous swing. So this is the previous low that made this high. So essentially this is the range. So we have pushed down into it, even though it's relatively equal lows, we still haven't broke it. So it's, we are following structure. So if we come, back up into previous supply like we did, right? This was the low, this is the high, this is a low, this is an overall retracement. We're looking for a lower low, right? But you can see we've reacted from our level of supply here. If we fail to generate any form of lower low below this level and we make a higher high, well, then we'll just know to look and turn around and look to buy it, right? Because then this would be some sort of, liquidity run. That low took out these lows. We have a counter trend. If we break, then that could be used as an area of demand to look for longs, right? I'm not saying that's going to happen, but I'm just saying that we need to be able to adapt to the market and not necessarily just take positions just because it broke structure, but the fact that we have come back down into a prior level of demand here, the previous swing point, we haven't technically broken structure to the downside, right? We've been making higher highs and higher lows. So it looks good for continuations lower. However, if we do break, then it does look good for continuations higher. And I know it's easier said than done. However, just by the way Chef JPY looks at this time, it would be really good for longs in my opinion. But anyways, we've come up into this previous level of supply here where we have distributed. So discrete higher highs and higher lows, potential Wyckoff schematic forming, and then we rolled over, right? So we have a lot of imbalance that's forming right there. So that's where we want to be pulling back up into. So if we scale into a lower time frame, we'll notice that price is creating relatively equal highs. So buy side liquidity is forming. So we could be seeing some form of buy to sell from it. That would be nice, right? Generate liquidity, sweep it, mitigate, fill in balance our last buying volume in here, and then run short. All right, so that's what we're going to be looking to do. So around 145, 145.5. So this is actually sitting at 145.3. We will be looking for overall shorts. You guys see how I'm getting that analysis? We're just taking the higher time frame, right? We are bullish. However, we're currently in a pullback phase. I know it's blurry. I'm just zoomed out here, right? So lower low, lower high, lower low, lower high. This is an overall lower low. And in the process of pulling back up into this level, this is not a break of structure. It's simply just a buy side liquidity run, right? Imagine all the retail traders. If I pull a trend line, it's probably very pretty, right? Yeah, something like this. So you could pull it like that from that wick to that wick. You can see the reactions. 1, 2, 3 touches. Retail is probably trading in and around this level. So we broke it. We almost retested. So if I just go like that, break and retest, and price goes long, and then price rolls over and sweeps to stop. So we have to think in terms of volume and liquidity and not in a trend line retail type of sense. But we can see that that was just the overall retracement. We slowed down into our level of interest, right? Why is this supply? Well, because upon a pullback, you want to look for our last buying volume, just to keep it simple, right? I'm not going to complicate you with fancy terminology that won't make sense to you. I just want to keep it as simple as possible. This is why I use this easy to follow lingo, okay? So just simple, the last buying volume within the pullback, the lower low that formed, that would turn into our supply, right? That demand to supply flip, because if that is a valid demand, we would have made a higher high, but we didn't. We rolled over and made the lower low as expected because we're currently downtrending. So that's why we wanted reactions from the level. And then obviously you can see the counter trend broke, and now we're just generating liquidity, waiting for pullbacks to continue lower. So hopefully you guys can see how I'm getting that. All right. Euro AUD. So nothing has changed from last week. We still are looking for overall longs. Now, again, I'm not going to talk about this level here because this is very far away. Price is nowhere near it, right? We are like 550 pips away. So I'm just going to be talking about the nearest areas of demand. And then if we do end up breaking, then probably maybe next Wednesday or next Saturday, we'll talk about this level. Okay. So overall, we just have to understand we are in a higher time frame uptrend. All right, I'm not going to go into everything that's going on a higher time frame in terms of liquidity runs. I talked about it last week. So a really good resource for you guys would be last week's Saturday live session. So I think what was last Saturday? The 18th. So if you go to the Trading Net YouTube channel, maybe type in my name and then just keywords like the 18th, it may pop up for the recording. Definitely go and watch that because I do break down a lot more pairs and a lot more pairs in depth. So I'm not going to do that today just because I've already been over it a few times before, talked about it on Wednesday's live session as well. So I'm just going to go over the overall directional bias in the areas of interest. So obviously, we can see we are currently in a higher time frame uptrend. We have swept liquidity, sell to buy, area of demand. This counter trend here failed when we failed to make a lower low here after the liquidity run, which turned into demand for a price to come back down and mitigate. In the process, we swept liquidity, right? Sell to buy. So we are continuing to push higher. We have broken the counter trend this way, right? This is the previous high that failed to generate a lower low. We have broken. And we can see we are above the daily 50, capping it as dynamic support, right? 4-hour 50 EMA, we are being capped again. What I love to see in the market is type 2 manipulation. If you guys have taken our Smart Money Supply and Demand crash course, for those of you who are more advanced traders who have gotten that far, you will have learned about type 1 and type 2 manipulation. I love type 2 manipulation because it has a very high win rate when it comes down to setups and their entries, but also at the same time, it makes sense in terms of what the institutions are doing on a day-to-day basis. Now, this was a higher time frame type 2 manipulation. And just like I said before about fractality in the markets, everything happens on every single time frame, right? It can happen on the 1 minute, the 5 minute, the hourly, the weekly, or the monthly, right? It doesn't matter, right? This just happens to be on the 4-hour. Now, we talked about in last week, GBP USD, we looked at a setup that had a type 2 manipulation on the 5 minute or something like that, or even like a 10 minute. But this is Euro AUD on the 4-hour. So we understand that we are bullish, right? We're overall bullish, so we shouldn't be looking to sell it, right? Just because we had a liquidity run here, buy to sell, this does not mean to turn around and then just short it. Unless we actually do get a firm break, a lower low, right? And then we have some form of higher time frame objective. Let's just say it's right here. I'm just going to make it up, right there. Then at that point, we're bearish counter trend. We had a buy to sell, and then we should be looking for pullbacks to sell down into that level because we haven't pushed down into it yet. There's still room to go from here to here, right? Again, this is just hypothetical. Then at that point, yeah, you could probably take an opportunity or a short. Could be a good opportunity, who knows? But in this sense, what I want to talk about is the fact that we're still overall bullish and we have generated sell side and buy side liquidity, right? In this sense, 1, 2, 3 touches. So we have 3 touches of this trend line. So retail is probably involved in this, in buys here, right? Just from a trend line perspective. We also have equal highs here, right? Capping it as resistance. So retail is probably in shorts or waiting for the breakout either above this resistance or below the support. We can also see that we are forming a retail head and shoulders. So what does this tell us? This tells us that, a retail head and shoulders, and it looks, well, it is in the opposite direction of trend because when it breaks, it's breaking lower in the opposite direction of trend because the trend is long, right? So that's what the market does. We'll entice retail shorts below the neckline, get them maybe upon a break and retest to try to short off, and then price just continues long in the overall direction, right? So in here we had type 2 because we swept buy side liquidity first, aka this resistance, entice buyers above the breakout of the resistance, right? We can see that this happened in London session, anywhere between 1 and 5 a.m. Eastern time. This is the 4-hour, so I have 4-hour candles. So we enticed traders London open, came down. This took a few days. But then we swept stop losses of anyone who was buying because they're probably placing their stops below the low, and then enticing people to take shorts below the neckline of the head and shoulders or below the breakout of this trend line here. So sweep buy side, sweep sell side, and continue long. So what does that provide us? Well, typically what we like to see when this occurs, buy to sell to buy, that would be really, really good for pullbacks into just our typical areas of interest, right? Areas of demand, areas of sponsorship, areas of imbalance, whatever that may be, we'd like to see that. And obviously we didn't really get that. It wasn't very clean here because we didn't see, we saw the buy to sell to buy, but it wasn't like a firm, clear higher high above the previous high. It kind of just started to trickle. But we understand the concepts behind it and we can be confident in our overall direction. So that's bullish, right? Sorry for going over all that, but I just felt as if that would potentially help people understand more about liquidity. But anyways, this is why this is an area of interest, because the buy to sell to buy, you can classify that as supply that we came into and we failed to make a lower low, higher high. So that would be that supply to demand flip. But more importantly, this is essentially the last selling volume that generated the higher high following the type 2 manipulation. So that's why anywhere in this region of price would be good. I just kind of have that as just a general area, just because that's all I can see at this time. So if we get an overall pullback, that's why we're looking at that. But on the 1 hour time frame, we're still holding these pending orders, right? We talked about this last Saturday, I believe, or maybe it was last Wednesday. Yeah, this hadn't formed at the time. Let's see, Monday. Yeah, this hadn't formed yet. So Wednesday, we talked about retracements into our 2 levels. So just going based upon market structure, right? If we do get an overall retracement, it's not a break of structure where we should be looking for pullbacks to short. This would just be an overall retracement for overall continuations within the higher time frame direction. So that's why we have this level. So if we do break, great. If not, we can continue with the lower time frame trend here, right? Trade the trend until it breaks as long as you have adequate confluences. So let's look at the counter trend. Lower low, lower high. Lower low, lower high. I guess we failed to make a lower low, but essentially this was our previous area of supply, and this was our last selling volume here, selling volume here. So just a couple of areas of repricing. That's why I have those 2 levels for overall pullbacks to continue long from either of those 2 levels, just to continue with the overall direction of trend. We can see we have equal highs, so if we do get a retracement, that would be that buy side liquidity in which we would be looking to take. All right, so just keeping it very simple. Is what we do. So Euro NZD, very similar. I won't go over everything. It's pretty much the exact same thing as Euro AUD. Overall bias is long. We're pretty much hitting our previous high, so generating relatively equal highs almost at this time. Higher high, higher low, looking for a higher high into our overall level of supply at 1.77. So we haven't even hit that yet. So we know almost for a fact that we're going to continue long at least until that price. Accumulation, just continuing with the overall direction of trend. High, low, high, low. This is on a lower time frame. There's just liquidity resting here. This is not something that you would pick up on when prices, I guess in this region of price here. Like if you were, I'll just use bar replay. If we were right here, you really wouldn't know that price is going to come back down and sweep that. There's no telling. Price could have easily reacted off of demand and continued long, right? It could have done that. But the fact that it didn't, after the fact, right? We saw this as a liquidity run, and then the failure to generate the lower low and then the higher high, they continue with the overall direction. It's not a break of structure, it's just liquidity runs for continuations with the overall trend. So where are our repricing events? Well, we have a lower low, a lower high, lower low, lower high, failed, higher high. So this is our overall demand. However, we can see that this is an area of supply in here, supply in here. So we had our last selling volume that failed to generate the lower low. And then we had a little bit of an area of demand in here that reacted from this level of supply, right? So if that supply was valid, it would have, respected and made the lower low, because just going off of basic trend, if you're making lower lows and lower highs, what is a lower high? A pullback for continuations into a level of supply, essentially, just to keep it simple. So the fact that we did not do this and we made a higher high instead, this supply will flip to demand, and then we can look to trade it from that. All right. So these 2 levels, looking for overall retracements, we can see just based upon the law of effort that we teach within our course, that this is a very strong impulsive move. So when we have strong impulsive moves like this and a very weak retracement, we know that buyers are still in favor. right? Buyers are still in control of the market. And I mean, you can even just see that with the higher time frame trend, obviously, but just for more confluence, typically when we have a very strong expansion and a very weak retracement, it's usually followed by a very strong expansion again. All right, so those two levels, what I'm looking for on Euro NZD. Let's see, we had 14 pairs, so how many have we gone over? 1, 2, 3, 4, 5, 6, 7. All right, so I'm going to go over 3 more, take some questions, and then we'll finish up with the remainder. So Euro GBP looks pretty good, in my opinion. I have a few areas that I want to go over with you. One of them, what I really wanted was price to just stall out right here on Friday. I really didn't want the entry on Friday. Why? Because I wanted this to be an opportunity that you guys could take advantage of. And also I would form Monday morning to give us the continuation with the overall direction. But we ended up coming into our area of interest anyways. We are in profit, but I was hoping that it wouldn't mitigate on Friday, but it did. But anyways, let's look at the higher time frame and just kind of see what's going on. So currently, you know, we've talked about this before, right? You guys understand that we are overall bullish, right? We're making higher highs, higher lows. On a higher time frame, we have equal highs, right? We have relatively equal highs. So I don't foresee us falling significantly. If we do, then it is what it is. We can just take advantage of that when it comes. We can just adapt. But currently, if we're in a bullish market, why would someone say we're going to go short, right? It's just kind of stupid, right? Just use common sense. If we're pushing up, look to buy it. If it breaks, then we adapt. We're never going to be 100%. Just make it as simple as possible. We have equal highs, so we want to continue to buy it. Where is that previous level of demand? Well, we can see in here that we had a lower low, lower high, lower low, lower high, lower low. We actually accumulated lower time frame and then expanded and broke the structure. So we're looking for, and again, very strong impulsive move, very weak retracement. So looking for continuations from our lower time frame level of imbalance and really demand. So essentially, this is where we accumulated. This is the very strong impulsive move. The imbalance that formed around 8,660, we haven't reached that level yet. So I do think that if price is going to go long, it really should push down into imbalance first. So that is why, because of the fact that we have, I mean, I guess you can call it maybe a break of structure, high, low, failure, lower, low. So we're trending short, right? Lower, lower high, lower, lower high, lower high, looking for continuations, overall retracement phase into our higher time frame objective. Because why? We're overall bullish. And we just got to make it simple, right? So this is our previous high, right? So we want to make another higher high. This would just be, you know, higher high, higher low, higher high, you know, just overall continuations, just to keep it as simple as possible. We don't need to complicate it. So anyways, why are we shorting? Well, for one, we have an objective that hasn't been met yet. But two, we are counter trend bearish at this time. All right. So why right in here, and why do I have this? Well, there is a level of supply in here that I wasn't trading from. However, if we saw a reaction and a break of structure, we could look to counter trend sell it into objective, which we are doing now. So this was just, you know, just a general area of supply. We can see that when we had this huge push to the upside, followed by the huge push to the downside, we kind of repriced ourselves and then we continued. So that is that level of supply that not necessarily I would be taking a trade from, just because, well, first and foremost, I would have to place my stop above here. I'm not looking for long-term shorts. So it wouldn't make sense in terms of a risk to reward perspective. But anyways, we're bullish. So why would I be wanting to sell it at supply when we're bullish? But we had the reaction. So we formed, well, we came up into this level and we started downtrending. So I'm not going to talk about how we hedged. This was, you know, a couple weeks ago, which we did that. We hedged longs with shorts, and obviously we lost on our longs, but we were in really good profit on our shorts. That's why it's okay to hedge when appropriate. And we teach about hedging in our courses as well, because it's a very powerful way to mitigate risk, but it has to be done appropriately. Very specific criteria needs to be met for that. But anyways, we can just follow the mitigation train. Supply here, our last buying volume before our low here. We pulled back, failed to generate a higher high, lower low again, pull back into that level. This is where we had our entry, our initial short entry from 0.89, right? Or actually, I think we entered at 89005. But anyways, we can see that that was our distribution, our last buying volume before we failed and made a lower low. In the process, we formed this channel. We broke So obviously there's liquidity resting above, which is why this level would be appropriate to sweep the liquidity before continuations lower. So that was our first entry. So we got that entry. We just missed our stops. Thank God. But anyways, lower low, lower high, lower low. Where is our previous last buying volumes essentially? Well, let's look at the counter trend. It just makes it simple, right? Higher high, higher low, higher high, lower low. So where was the previous low that made the last higher high before the structure had been broken? Right here. This is the low that generated this high that came into that level that made the lower low. So that was our last range. So let's find, trying to phrase this the right way. Let's find regions of price within this range that when price fell, we experienced repricing events. If that makes sense. So essentially buying volume in here, buying volume in here, and buying volume in here. Okay. So because this is within the range here, we have our buying volume. So when we create our overall lower low, lower low, lower high, lower low. Okay. So when we created our lower low, we couldn't just expect to continue to trade shorts, even though we were looking for shorts from these two levels and we got into them and we lost, right? We can then turn around and understand that this is because we made a lower low here in comparison to this low. Now we could be experiencing expansion, overall pullback expansion. Until then, yeah, we can continue to follow the trend, right? But when we made that lower low, all bets are off now. We could see that overall expansion, or excuse me, retracement for then another expansion to the downside, all right? So I didn't choose this level here because we already kind of mitigated it and it's not really pretty. These two levels are really good. So I did not trade it from this level. However, I do have another opportunity. If we do get a further retracement higher into 883 or 88836, this risk to reward here. So this last buying volume and essentially stops would have to go above the high. And if we ended up breaking to the upside, well then, oh well, we'll turn around and look to buy it with the overall direction. But currently, we're bearish, but we're experiencing an overall retracement. So we haven't officially broken structure back to the downside yet here. Like we haven't broken this swing. So technically, yeah, could we see another run up into that high before continuations lower? Yeah, possibly, which is why I still have this order pending, right? 88836, there's your signal. But anyways, I want to talk about what's going on in here. This is very interesting. So let's scale in. So when price reaches, one of our two levels, and then on a lower time frame, we have time and price events to where, we can follow liquidity, follow the volume, and then look for counter trend breaks to the downside. This could be sufficient for higher time frame expansions to the downside, meaning this high right here could be the high of the market, meaning that the finish of the overall retracement before expanding again, because we've come up into at least one of our objective levels. So with that being said, we have additional confluence because you see in here, we formed our typical type 2 manipulation, just like we talked about, e.g. 10-minute time frame, just like we looked at Euro AUD on the 4-hour. Same thing on the Euro GBP, but just on the 10-minute. And it doesn't have to just be 10-minute. It could be 9-minute, 15-minute, whatever. It just, price is price. It looks pretty on the 10-minute, which is why I'm showing it to you on this time frame. So we have buy side liquidity, we have sell side liquidity. We can see that we broke, so entice sellers, we retest, entice more sellers, and then we went long, right? So we swept sell side, and then we went long, right? And then we took buy side liquidity, and then we fell, we repriced, failed to make a higher high, and we rolled over and made our lower low. So that we were shaking people out of the market after coming into an objective level. So swept sell side, swept buy side, and then we failed and made a lower low. So now where is that repricing? Well, we have two of them. Because if this is demand, if we were going to follow demand, right? This is demand here. We made a higher high technically, pulled back. This could be demand in a lower time frame. We wanted to have seen a higher high. We didn't want to see it, but just from a typical market structure standpoint, high, low, high, low, high, low, high, low. What do you expect? High or high, right? We didn't do that. So at that point in time, we rolled over and made a lower low. So this becomes that flip from demand to supply. So that's why I want retracements into, one of these two levels. So I saw, this is going to be 30-minute would be pretty. Yeah, something like that. So when we were trading down in here, I'm like, okay, well, could we just have a shallow retracement into this area of supply for continuations lower? Yeah, we could, which is why I had two levels, that level and this level. So come Monday, we could open up and price just may push higher, sweep Friday's high, right, which is right here, or actually, it's right here. This is the Friday's high. So we could sweep it, come into this area of supply, which I really do like. I prefer over this level anyways, before continuation is lower. However, if the market just is very extremely strong in favor of the pound, which that's what we're looking for is pound strength, we could see just a free fall, right? Price just opens up and then we just keep going. So that's why we can have two levels. Because if you only had this one here, which is preferred because it's clear based upon the type 2 manipulation why that's the supply. This is just another pullback within the overall direction. So I just count it as just basic supply. If you had just taken or had this pending order and didn't get in here and price just rolled over, you would have the fear of missing out most likely, and then you would look to sell it when we're down in here. And then you'd be getting in at a discount instead of at a premium. Right? So psychology would take control over you, which is why it's okay to have multiple levels as long as the levels are valid. Right? This is the valid level, so I just take half risk here, half risk here. I don't need to hit home runs every time. But it helps with my psychology to have multiple levels in case something like this actually does occur. So anyways, we have this level here. You can place that pending order if you want. I mean, I'm not telling you to, but I have. So that is my level short term. If we continue within this overall retracement, I have 88836, which is right in here. And then stops to go above the overall high just because at that point, we're not expecting price to break structure. If we're in a downtrend, probability, nothing's guaranteed, but what's the probability that we go short versus long, right? If someone said to you, if you had to choose right now to save your life, to short Euro GBP or buy it, what would you do? Probably short it. Why? Because we're in a downtrend. So we can't, get in deep into our mind and just assume that, oh, well, who knows? We could go long. Just keep it simple, guys. Just keep it simple. So we have that level there, and this level here, because the probability of us actually breaking structure is slim. So that's why I'm okay taking risk at these levels. Stop losses at break even for this level here, and we'll continue. So even if we do lose these trades, we're still covered with our original entry because we've taken partials on it, and it's a good risk to reward as well. Anyways, that's Euro GBP, Euro JPY. Looking for shorts as well. Yen is quite strong at the moment. If we go to our 4-hour time frame, we've already talked about this plenty of times. Last Saturday, we talked about it. Last Wednesday, we already know that we're looking for shorts, right? We are in an overall uptrend. I understand that. 150 would be our higher time frame objective. Whether it takes a week, a month, or a year to hit it, that's what I'm looking for, higher time frame, right? But I think that we can dig deeper into 137. Why? Because if this is the high that made this low, and that's the low that made this high, that's the high that made this low, and this is the low that made really this high here, but because of the fact that we created equal lows, I would classify this as the range. So that way we could come down, sweep the equal lows within this overall retracement into demand on a lower time frame, sweep the equal lows 137 psychological level before continuing. So it'd still follow the overall market structure, right? So we're just in a longer term pullback phase. We've been in a pullback since October of 2022. Right, so very strong impulsive move that took September 25th through October 25th, essentially. So a month. And then now it's taking like 6 months to just, if it took 1 month to go from here to here, it's taking 6 months to go from here back down to at least this previous low, which we haven't even hit yet. So we already know buyers are still in control. So just like all the other XXX yen pairs, we're looking for continuation short from our previous level of supply. So we understand that, we swept liquidity, we had a buy to sell, we came up into imbalance and that supply, and we had our repricing here and we just expanded lower. So that is our level of supply in which we are still holding. So that's why we have this risk to reward here. I just didn't want to have like a line that just goes through because I didn't want to confuse you guys. But essentially this risk to reward here is that trade. So yeah, let's talk about this for a minute. 197 pips. People are probably in the comments screaming, oh, this guy is ridiculous. He doesn't know how to trade. Who has 197 pip stop loss? Well, look at it from a risk reward standpoint. It's all about percentages. It's not about pips, guys, right? So this is only a 1 to 3.5. But remember what I said before about my rules. If I get at least a 1 to 3 with a good setup, I'm taking it. Based upon my win rate, I need at least a 1 to 3 consistently to be profitable. And I do that on a day-to-day, week-to-week basis. So I'm okay with that because I understand that this is simply just a higher time frame trade. So yeah, I know for a fact that I'm going to be in this trade for a long time. And I'm okay with that, right? I can do that. I can have swing trades, but I can also have intraday to intra-week trades where I can take trades based upon all these other levels in here. Right? We had a level right here that we're trading from. We could have a level here that we could trade from, which could take a couple days at most to play out. Right? So I can be in and out of these positions on a lower time frame, but then hold higher time frame trades. So stops were above this previous high here. Really, you should have put it here, but based upon my risk to reward, it wouldn't have been worth it at that point. Even though the appropriate stop loss would have been above the high, I thought that, especially when we were distributing in here, and especially when we broke lower, the stop above the high would be fine, in my opinion. Either above the repricing high or the overall high is fine. I prefer the overall higher high, the overall high over the repricing's high. But either one is still valid because if we repriced and shorted off, we really shouldn't come back above that high anyways. But I won't go into the reasons why. It would just take too long to explain. Anyways, we have sell side liquidity to take. And we can be holding this for a long time, right? We understand this is going to take a while. So we get in February 21st. We've been holding this trade for over a month. So I knew that I was just going to be stuck in it, but that's okay. If we had distribution, we rolled over, and then we started trading with the lower time frame trend here, yeah, I can get quick, 1 to 4s, 1 to 6s all day long. And then let's just say, for instance, that, I don't know, I lose on this trade here, I lose on this trade here, price comes back up, runs the high, but still continues in its overall direction. Well, then this could almost act as a hedge. I'm break even on this right now. At this point, if price comes back up, I'm break even. But let's just say we run the high here and then we roll lower. It could act as a hedge in a sense of, I could lose lower time frame trades, but I'm still in my higher time frame trade. So the losses that I incur on the lower time frame could be mitigated by my higher time frame trade profit, if that makes sense. Right? Because let's just say, for instance, and I know I'm taking too long going over this, and I'll stop in a second. Let's just say you have a trade that looks like this. Let's just say this is a higher time frame trade, 1 to 5. Okay, actually, I'll make it like a 1 to 3 or 1 to 4. Right, 1 to 4. So this is going to take a while. 4% still is within your rules, but it's okay because you come up into the overall level, and I'll just say it's right here, right? You come up into the overall level, and it doesn't matter what price does. You can have lower time frame trades in here, and you can lose them. 1 loss, 2 loss, whatever, 3 losses, and then it continues lower, hits your take profit. So you've incurred 3 losses in here, but you've just been patient with it, just because this is just the overall area of interest. And again, I'm making this up, guys. 4% minus 3%, you're still netting 1%, right? So it's not necessarily a hedge. It's sort of just a help to mitigate some losses that you could incur on the lower time frame, which is why I do higher time frame trade as well. Anyway, sorry for that rant. Continuations, we can see that this is the high that generated this overall lower low. This is just a liquidity run, buy to sell. We're looking for continuations lower. So we talked about 2 areas of interest on, I believe it was last Saturday. Yeah, it was last Saturday. We talked about this inside supply, right? And then our imbalance fill, last buying volume in here. So we can see that we haven't hit that secondary level. At this point, I am probably not going to be trading this. So this can probably be deleted. I am break even on this trade here. So if we come all the way back up, I'm just going to get out of that. I wouldn't be confident in it at that particular time. But anyways, we can see that this is not a low in the market. We still have 137. We need to come down a little bit lower, right? This could even act as a head and shoulders. Shoulder, head, shoulder. entry from our supply zone, in which I'll talk about in a second, for that neckline break. We break it, we entice sellers, we come into the objective, and then price goes along from that level with the overall higher time frame direction of trend. Something like that, right? It's just putting the pieces together, following the higher and lower time frame, and just building confluence within your trades. So we know that even though we're trading counter trend, we're not supposed to be trading counter trend, but we have an objective that we haven't come into yet, and we're currently bearish. We're in profit on this trade here. And now essentially this is almost a lower low. I'm looking for pullbacks into our last buying volume because we can see high, low, high, low, high, low, failed, lower, low. Area of supply, EMAs are on our side here. So we're looking for rollover into 137. So that was a long explanation. So sorry for that. Anyways, GBP AUD, I'm going to make this one super, super quick. There's really nothing much to it. Right? We can just see across the board XXX AUD and XXX NZD are pushing higher, like EA, EN, GN, GA, all that good stuff. Okay, pound is strong, Aussie and New Zealand dollar a weak, and that just is easily seen in the charts here. Higher time frame, we're bullish. We talked about this last week that we had equal lows for a good solid 3 months, and then we had our type 2 manipulation. Right, we created 1, 2, 3 touches, 1, 2, 3 touches, still keeping the support here. We broke out of this channel, enticing buyers, right? Above the breakout, people are buying from support, and then price runs lower. So we buy, entice buyers, come down, take their stops, entice sellers below the support, price accumulates and goes long. So that buy to sell to buy. So this is our last selling volume in here before we broke structure, right? Lower low, lower high, lower low, higher high. So this would not be a break of structure for continuations lower. This would be a break of structure for overall retracements into our higher time frame accumulation and demand, and it would be a fill of the imbalance as well in here. So 1.7550 would be that higher time frame level. We may not even come into it anytime soon, but if it does, then that would be my level of interest. So we can have our higher time frame levels, then we can scale in and trade with the current trend. Right, just keep trading with the trend like we did in here. We hit a cumulative profit because half risk each accumulated to 7% return for us. That was a great trade. We're just continuing to trade with the overall direction of trend, utilizing the concepts that we teach, right? Just time and price, liquidity runs, supply and demand, areas of imbalance. Just keeping it very, very simple. We don't need to complicate it whatsoever. I don't know why. Oh, this is supposed to be 2. Sorry, I just want to make this pretty. Anyway, so I'm not going to go over these 2 levels again. This could take a while as well. Let's just look at the current direction of trend. Higher high, higher low, higher high. Okay, that's it. Lower low, lower high, lower low, lower high, lower low, lower high, failed to make the lower low, higher high. This is our demand. Flipped from supply to demand. Now, if we get an overall retracement, we would sweep sell side liquidity, sell to buy into our demand to go long. That's what I'm looking for. I don't really see anything else. If we scale in and we continue with this lower time frame trend, and we just continue to go long, well, then I would just wait for something to occur similar to this, right? I don't know, some sort of, we create equal lows, sell to buy at the right time of day. We create a repricing here, area of demand. We can see lower low, lower high, lower low, lower high. We failed, higher high. We can look to pull back into demand to continue long. That could be something that we just continue with this trend with, right? But it hasn't formed yet. I'm not saying it's going to. I'm just saying that if that happens, we can continue to trade with the trend until it breaks, as long as we have the setup. Right? I'm not just saying just go and buy it or just wait for a pullback to just get in along. I'm saying understand the higher time frame direction, trade with it. If you're not, then if you're trading with the lower time frame trend, as long as you have adequate confluences and you're buying or selling, in this particular example, we're buying into a higher time frame level of objective, well, then we're fine, right? So in this case, if we have an overall retracement, that's our level. If we have a deeper retracement, these are our levels, or potentially 1.7550, because that would just be higher time frame. Just imagine this, guys. Imagine high, low, high, low, high. What do you expect? Higher low for a higher high? Okay, cool. Let's just expand it out to a higher time frame, because that's what we're seeing here. High, low, high, low, high, low. Same thing here. High, low, high, low, high, low, high, low, high, right? Same thing here. High, low, high, low, high. Just stuff like that. It's fractal. So we need to be looking at the higher and the lower time frame trends. So if something like I just drew earlier occurs, then great, we can take advantage of it. If it doesn't, we just sit on our hands until it either does or it rolls over into our level and then we buy it. Or if it just keeps on trickling and we never end up getting a trade, then oh well, we move on, right? We trade what we see, not what we want to see. All right, so that was GBPAD. I won't take nearly as long with the remaining 7. I want to get you guys going with your weekend. I'm sure you'd rather be doing anything else. I'm stopping my share and I'll take some questions. All righty. Let's see. All right, perfect. Finally drink my coffee now. All righty, let's see what we have. All right, cool. Let's see. Is GJ on my list? GJ is on my list. I will be going over that coming up soon. Sorry guys, I don't do gold. I don't do commodities. I don't do cryptos, futures, stocks, nothing. I only do Forex. So I will never go over gold, US 30, anything like that. And also to just remember, you know, it wouldn't be worth it for me to go over gold. I just don't trade it. So just because, you know, I'm on this live session doesn't mean it would be of value for you to have me go over gold, right? Because I don't know how it moves, right? Obviously, following just general smart money concepts, yes, but smart money concepts looks different all the time. The overall concepts will forever be the same because that's how the market is formed and that's how the market moves. But I just don't know how gold specifically moves. I know exactly how the majors move and some of the crosses like ACAD, NCAD, HF, and NCHF. Love those pairs. I've been studying them for 6 years. So I've had so much experience. This is why I'm able to kind of intuitively understand their movements and give value there. But with gold and everything like that, I wouldn't be of any help. I would only cause problems because I would be not giving you value that could be actual true value. It would just be, I just don't have experience with it. So I'm sorry, guys. Trading is irrelevant depending on this different skill set. Intraday trading, some scalping. Caught that move on Euro USD. We got in at the same time waiting for it at the start of the week. Yeah, I mean, congrats on the EU if you profited from that. Let's see what else we have. Also want to know how you make sure that counter trend move does not become a reversal. So you mean like if we're counter trend trading and it just turns into the overall trend? I mean, yeah, that could occur. It would just be a higher time frame break of structure, right? It would just be the higher time frame shift in structure. So for instance, you know, if we're trending long and we're on a higher time frame, higher high, higher low sequence, and we formed a high and we're pulling back, right, into a higher time frame level of demand, and we're making lower lows and lower highs within that overall pullback, well, then we can be trading counter trend. But how do we know that it's not going to just turn into the overall trend and break higher time frame structure to the downside? We don't know that. I can't predict the market. I can't foresee the market's future. No one can. So we just have to trade what we know and what we see, right? So you're going to lose eventually, but you have to just build probabilities. You can't just know, okay, this is going to continue or this is not. You're never going to be 100%. And that's what people think that you can be. You can't. You won't. Trade what's probable. Building probabilities is the key to trading success. Knowing nothing is going to be 100% guarantee. And if you think that's the case, I am very sorry to say you're absolutely wrong, because it's never, ever going to be 100%. So we don't know. To answer your question, it's a good question, but we don't know if it's going to reverse. We just have to trade with the probabilities. If we're pushing higher time frame long, right, and if we're selling short into a higher time frame level of objective, or aka an area of demand, here I'll even share my screen because this is a good question, guys. So I want you guys to see this. So let's just say higher time frame, right? We're making higher highs and higher lows, but now we've started to retrace, right? So we could be possibly selling. Let's just say, for instance, we see a buy to sell. We want to pull back into supply and take a short. Well, first and foremost, are we good to go for shorts? Meaning, how do we know that this isn't the end of the pullback to where we should be looking for longs again? Well, that's where we just have to look for our objective. Let's just say the objective is right here. Area of demand, that's where we need to push down into. So obviously we have room to go. So upon a pullback, we can look to sell it because we have room to go between here and here, right? Simple. How do we know that it's not going to turn into the overall trend and break? We don't. We have to continue to trade with the trend, right? Because the probability of us going long is way more probable than us going short. Why? Because we're bullish. It's simple. I mean, you just have to keep it simple. And of course, if we end up going short and we break and you look to buy it here, well, then you know at that point in time, now we're bearish, so we can be looking for pullbacks to continue to sell it. It's just probabilities at the end of the day. Nothing is going to be guaranteed. So, but good question. That's a good question. Let's see. Just a few more questions and we'll get right back into it, guys. I know you guys are dying to see more. AUD USD, I already went over that, so I won't go over it again. I went over at the start of the live session. Guys, live sessions start at 10 a.m. Eastern time. If you're not able to make it at that time, just watch the recording afterwards. Let's see. Man, you guys are killing me. Didn't I just say I don't do gold? Come on, guys. Don't have me boot people. Will there be a lot, in your opinion, too? I think there will be a last pullback on the yen pairs, then crash. You mean crashes in short? Yeah, I mean, we could see that. Like XXX yen, I think, can continue to push lower before it goes long. We are higher time frame bullish on these XXX yen pairs. We are. Chef J, we're overall bullish. EJ, we're overall bullish. CAD J, overall bullish. GJ, too. But currently, we're in a pullback phase, and we have more room to go to the downside, in my opinion, before we continue higher. So that's just why I'm liking shorts short term before long-term longs potentially. Euro AUD. I already went over this, guys. If you guys can't join in when we start, just watch the recording afterwards. I'm not going to repeat analysis. Let's see. All right. Is that 3-touch sell side liquidity forming on EN? Well, we already went over EN. Let me just see what you mean. 3-touch sell side liquidity. I'm not exactly sure what you mean by that. You can rephrase. Maybe I can help you out. NZD USD, is that on my list? That is, it is not something I'll be going over today. All right, we'll finish up here, guys. Let's see. Euro NZD. Let me just get us back into big screen mode here. All right. Cool. So let's go back to, we finished off with GN. So if you guys remember from last Wednesday's live session, we talked about, or maybe it was Saturday. Well, Saturday, we talked about this area of interest here. We understood that we're currently bullish, right? We're making higher highs and higher lows. We've accumulated higher time frame. We're expanding. We have a higher time frame area of interest at essentially 2 or 2.01. So we're trading long until we at least reach that level, in my opinion. So we can see that we had a sell side liquidity run. People thought it was a break of structure. So when they pulled back to short it, they got their stops run, which I'm not surprised. Anyways, demand here, swept sell side liquidity continuations. So we're looking for obviously buys, right? Higher high, higher low, higher high, higher low, just trading with the current direction of trend. We can see that that is supply that failed to generate a lower low, obviously, because we're in an uptrend and we made a higher high. So in here becomes demand. So on a lower time frame, we talked about 2 levels. We talked about a level right in here and then right in here on a lower time frame. So I said that when we got into this position, we were messing around a little bit. When price was up here, I said, okay, you know what? We're just chopping around too much. It's not looking good. I'm just going to go break even on this. Came down, hit me break even, but then we triggered into our secondary position, and we are up a really good amount at this current time. And that's why we have this risk reward right here. So now we said that, okay, well, we swept liquidity coming into a level of demand, just continuing with the overall direction. We made a higher high. So let's look at the range. Let's look at the pullback, right? So we had a low, high, low, high, low, higher high. So this is the range in which we need to trade. So obviously we not need to buy before, well, at least before we pull back 50% of the way, but really at least into here, somewhere into this region. So we just kind of look at, regions. I mean, it's just, it's tricky because it's just trickling. right? So there's really no clear area. So I just kind of went through different time frames and I saw just general areas of repricing. I saw an area here, saw an area here. So half risk here, half risk here. You don't want to be putting stop. Let's just see. I'm just going to do this to show you guys. You don't want to be putting stop here. Why? Because at that point, it wouldn't be a good risk to reward. You see, it's only a 1 to 2.8. So it doesn't meet my 1 to 3 rules. So at this time, what I would do is I would still do half risk, but I would go like this. So I move it like that to create a 1 to 7. And then the other one would be right there. And then the stop could go below that low. And at that time, that would be a 1 to 5. So half risk and half risk, it's still a good risk to reward compared to your original half risk position. So you get triggered into this one, which we are. Not break even on it yet because I want to see a higher high first. Once we come above this previous high, then I'll go break even and take some partials. But if price comes back down and hits our stop, then we'll be triggered into our secondary position. And if it goes long, then great. We lose on this, we win on this one, and then the winner takes care of that loser and we make a net profit, right? Because the probability of us going long is higher than us going short. And we have sufficient confluences for our continuations higher. So we're already in this position. We got a wick entry and good profit. If price comes back down, I am looking to buy again at 1.9508. Stops will go below the low. All right, that's GN. USD CAD. Again, I was really thinking when price was pulling back in here, I'm like, please don't hit this level today. This was Friday, so yesterday. I really didn't want to get triggered into this, but I couldn't pass it up just because the risk reward was really good and the analysis was on point. Like the whole setup was really pretty. So I am in this position. I'm floating break even right now. We have a gap in here that we haven't filled. So that's just one confluence. One confluence, we have the gap. Two, we are respecting structure. High, low, high, low. We've come into demand. We've swept liquidity, sell to buy. We've broken the counter trend. We formed repricing events, and we're overall bullish. So confluence, confluence, confluence is the key. So anyways, we can see that, again, law of effort, strong impulsive move, weak retracement. Strong impulsive move. Hopefully we get some sort of weak retracement, maybe into our secondary position for continuations. So overall, we're bullish. This is our demand, essentially from this high to this low. This is our demand. But to refine it a little bit, we can come just deeper into imbalance. And this is our last selling volume here. Stops would have to go below this low there. So we are currently in this position, right? We just got tapped into it. So just a piece of advice for those of you who are trading smart money. Smart money, especially the way we trade it, can provide extremely precise entries just because we understand where the institutions are getting in, where the areas of interest are. So when we have those precise areas, it's nice to have a broker that has very tight spreads. So for those of you who are not in the United States, you are lucky because there are less restrictions on, more available options in terms of brokerages. So I'm in the States, so there's a lot of more regulations, so there's not too many options. However, I still do have I would rather have higher commissions on my trades than higher spreads because I want to be able to get into the position at my desired level. Right, 1.3630. We entered. There was a lower time frame area, and here is like 1.361 or something like that. But anyways, we had actually two positions. So one of them, let me just see, 15-minute. One of them was right here. We had equal lows right here that were swept, right? Sell to buy at the right time of day. We broke structure. We created sell side liquidity, and then the news came out. We sold to buy, right? So clear area of interest. When the news came out, news was used as the excuse to propel price lower, to mitigate, to continue long. I thought this was going to be a great trade, but ended up rolling back over to the downside. So I did lose that trade. I didn't go break even on it yet. And I want to be honest with you guys. I mean, I'm trying to be fully transparent. I lost this trade. I did. Why? Because I don't play stops to break even or partials until the previous high is taken, right? Now, what you could have done is you could have seen, okay, well, there's an area of supply right there. So you could have taken partials right there maybe. And that could be accurate. I mean, I wouldn't go against that, but I just go typically first take profits always based upon market structure, right? Just the previous high or the previous low, whichever direction you're trading. Then the subsequent take profits are based upon areas of interest in the market that could potentially reverse from you, right? So for instance, where would I look to take profit next if price did continue long? Probably at the gap. That would be a good area because who knows? Could price push up into the gap, fill it, and then go short? Maybe. That's an area of interest that price could potentially reverse from me. All right, let's just say there's a clear area of demand, or excuse me, supply right here. Again, making this up. If there is a chance that price could go against us based upon confluences in the market, price action, order flow, everything that says we could have a reaction from the level and potentially reverse, then that's where I'm taking my profit. Why would I take profit at, let's just say, a 1 to 3, which is right here? And what is the significance of that level? Just because it's a 1 to 3 based upon my trade. The market doesn't care about my trade or the statistics of my trade, like the risk reward or whatever. So why are we taking profit right here? Why don't we take profit at the level of supply? Because what are the chances that it actually stops here versus stops here? There's a higher chance that it stops here instead of here. Why? Because this is an irrelevant area of interest. You're just because you're basing it upon numbers. You're basing it upon, oh, let me get out or take profit at a 1 to 2 or 1 to 3, not at significant levels in the market. This is how we can extrapolate the most out of our trade. This is how we trade manage better, right? So for those who can follow this type of just simple rule, look at areas of interest just based upon other smart money confluences, right? Or supply and demand. Let's just say that you're buying, right? Because we did. Well, what if try to see in your mind to try to find a sell setup? Obviously, you're not going to be selling it, but I'm just saying try to find a sell setup and take your profit on your buys where you would quote unquote sell it, even though you're not selling it because you're in a bullish uptrend. But you guys understand what I mean, though, because that would be the region in which you want to be taking profit because you're losing this amount, whatever profit that between this level in which you took partials at versus your highly probable area, aka the supply, you're losing that amount of money, whatever that is, where you could have easily just have held to this take profit and then made that much money, right? You guys understand what I mean, though, right? It's all about taking profit at those levels. Sorry, I know I go on rants. I shouldn't. Anyways, had that opportunity. It failed. It rolled over. Got into our secondary position from our higher time frame level, and clearly we can see just it's easy counter trend: low, high, low, high, low. We had our sell to buy, and we broke the structure, obviously. So where are our repricings? Well, we had one right here. This is where our first entry is. We're being capped by the hourly 50 EMA, which is nice. And then we had our sell to buy that occurred at 6 a.m., well, more like 8 a.m., 9 a.m. So New York session open right here, swept all the liquidity, sell to buy. So we could pull back into here come next week as well. So, all right, continuations with NZD Chef are good in terms of shorts. Not much, it's not anything new. I think we talked about this on Wednesday's live session. We just kind of messed around. We didn't really make too many movements. But we can see here that we're making lower lows, lower highs, right? So even though we are higher time frame, well, actually we are higher time frame bearish. So, I've talked about this many times. I'm not going to go over this again, but very briefly, equal highs were run, buy to sell. We're currently bullish here. We failed. We made a lower low. So at least we're in a pullback phase. So 1, 2, we're looking for at least 3 drives, potentially even 4, because we're in an overall bearish market. So we could easily take out this low, come into 5.3, which is the higher time frame level of demand, way over to the left. Okay. So with that being said, we understand the higher time frame direction. Now we understand where the lower time frame is, right? We're lower time frame bearish as well. So higher and lower time frame are in conjunction with one another. Now we look for possible areas of interest. So where are our pullbacks here? High, low, high, low, high, low, failed, lower, low. Area of supply that mitigated this level of supply here. That's why we had our entry right there. Beautiful entry, right? Wick entry. In the process, once we identified it when price was in here and we failed to come up into it, I didn't have FOMO to say, oh, well, price is just going to keep falling and falling and falling, and I'm never going to be able to get into this trade short, even though I have the analysis and it's working out in my favor, right? I've identified it as price is falling, and price is falling, so why am I not taking advantage of it? Well, that's the problem with traders. They don't understand that when they have FOMO in here and they're looking to sell it because it didn't come up into their level immediately, this is all building liquidity prior to overall shorts in the market. So now they're getting trapped short here, and price goes long, they get scared, they get out, but then that's our entry because we generate liquidity huge buy to sell. And we can just see, imagine if you were trading this, we'll replay. Imagine if you were trading this right here and you had your sell position right there. How many of you would actually keep that order in play? I would hope a lot of people would. I would hope, but most people probably wouldn't, because you would see this as such a volatile move. We don't get scared of volatility. We don't get scared of news. We don't get scared of anything. Why? Because volatility, in this sense, liquidity runs. This is simply just a buy to sell. And at this current time, we would have to treat it as such, because we have to be strong in our analysis and confident in it to understand this is a valid level. So I don't care if it pushes up in one minute candle 500 pips, or that's not 500 pips, you know what I mean? It's a very strong move, 120 pips. We can't be scared of it, because it could easily be push up into that level and an immediate reversal, and we make profit. If the news is coming out and this is a huge expansionary move to the upside, well, let's just use it as the excuse to propel price into the desired level anyways to sweep liquidity. And then we turn around and then sell it. So we can't be scared of anything like that. Right? So that's what it's used for. So when it doesn't come up into your initial level, we have to just exercise some patience, because it's not always going to do it. And we have to understand that just because it's not doing it immediately doesn't mean that you're going to miss out. It just means that it could be building liquidity before it comes into your level, which is actually a good thing. That's what we want to see. So that was the case. We got our wick entry and we rolled over. So a huge buy to sell. So we want to be looking for pullbacks. And again, we didn't do it here. I was hoping we'd pull back, and we had another expansion to the downside. Again, many people would probably have FOMO here and look to sell it, but then price finally pulls back into the level and then shorts off. So we had two levels. One was right here, and then one was that overall repricing event. We did not come up into our secondary position, but let's just say price does. This, in my opinion, would just be an overall retracement from this expansion. So overall retracement for a continuation. So I'm still holding this position pending. It's still valid. But anyways, we reacted from our secondary level. So we are in profit on both trades. And now we can see that such a strong reaction. I'm liking retracements into lower time frame supply. So we've come up into the level, we've chopped around, and then we expanded lower. So really, this is your area of supply. So I was hoping that we would get back up into it. We just failed to do so. But again, that's okay, because this could be acting as buy-side liquidity. We could fake lower, right? Enticing sellers below this low here. Price runs up, takes the stop losses, entices buyers maybe above this high, comes up into our general area, and then we look to sell it. That is what I would like to see. So we have to be patient with it as well. Those are my, that's my level on NZD Chef. NZD Chef is overall bearish. All right, just a few more. GJ looking for shorts, just like all the other yen pairs. I'm not going to go over all of the intricacies here, just because we already went over it before. We can clearly see that we are in a downtrend. Higher time frame, yeah, potential uptrend. But this wedge pattern here, 1, 2, 3, 4 touches, 1, 2, 3, 4 touches. This is a retail pattern, right? When price breaks long out of a wedge pattern, we have to immediately think retail is buying. So what do? We sell. I'm not telling you to just sell it. I'm just saying we need to understand that because of the fact that this is a wedge and we broke out long, we probably will be experiencing shorts at some point, right? To then take the stops of anyone who's buying, but also at the same time, take the stops of anyone who, well, not necessarily stop, but entice sellers maybe below the breakout of this trend line to come into higher time frame demand before going long again. I'm not saying we're going to go long from here. I'm just saying that is an area of interest for me. So we've reacted from our level of supply here, right? High, low, high, liquidity run, low, failed, lower, low. Just like all the other end pairs we went over, right? So we have the objective, and I'm not going to get into it. It would just take too long. 155, 154, 154.5, something like that. And around that level, we haven't reached it yet. And we're counter trend bearish. So let's just say we are bullish, right? And we are bullish, right? We've swept higher time frame liquidity. All these lows were swept by this wick here. All these lows here. Huge sell to buy. So let's just say we go long. Well, okay, higher time frame we're bullish. We haven't reached an objective to go long yet, so we're still bearish, and we know that because we're making lower lows and lower highs in here. So this is a counter trend opportunity. So we're not trading with the trend. However, we have sufficient criteria for sells because we're just building confluences, even if it's counter trend, But at the same time, we know that if price is going to go long against us, it would probably do it from this level of objective here, and we haven't reached it yet. So sells are still valid. So low, failed, lower low again, lower high into supply, looking for a lower low now. So 1 hour time frame. Whereas following structure, there was a tiny level of supply in here. We had a fake out lower because we had a type 2 manipulation again, right? Equal highs, equal lows. We entice sellers, and we also entice them upon the break and retest. Oh gosh, it just boils my blood to say that. Break and retest. Ugh, gross. Anyways, break and retest. Traders look to go short from that, and then we sweep the stops, entice buyers above the resistance, and then take their stops there. So type 2 manipulation, having reacted from that level of interest. Huge push up into it. Can't get scared of the volatility because then we turn around and it's immediate, strong expansion to the downside. So anyways, lower low, lower high, lower low, right? I don't know why. Why don't I have? Oh, I see. Okay, that's why. There was a level here because I was like, why don't I have this? Because we traded this short. We had 2 levels. We had one right here. This was a level of supply. So I had a trade like in here somewhere, and I had another trade here. So we came lower, and then I went break even on them. Well, in price came back up and took me out right here. And I think that was where I had it. And I think the spread took me out. That's why. Because I was like, because I wouldn't get rid of analysis if I wasn't in the trade still. But anyways, yeah, I broke even on that one. But anyways, we had another opportunity. Lower low. This is the range, right? This high to this low, we pulled back. We created liquidity. Huge buy to sell again. Many people would think, oh, well, we're expanding so strongly, I'm deleting my order because I think it's going to continue. Well, it was a clear buy to sell. Don't get so, psychologically disturbed by volatility because it's just filling imbalance coming up into levels. That's it. Got to trust it. 163 psychological level. Beautiful. Into this position. We are break even on this now. So that was this risk reward there. So we are looking for continuations lower because we have made a lower low, just following the overall structure because we haven't hit objective yet at 154.5. So 2 levels, essentially right in here, 160.685, and then 162, essentially. So how can you trade this? Well, and actually, I'm not going to tell you. I want you guys to figure it out because these are the 2 levels. How would you go about placing these orders? Right? Just look at the risk. At some point in time after this live session, go to GJ, check it out, place your risk to reward tool, understand where an appropriate stop loss would be based upon the area of take profit. Look to see what kind of risk to reward it is. If it's good for you, you can take it. If not, I went over an example earlier about how we can split up positions and risk and where to place stops and everything like that based upon multiple levels. So I'm not going to tell you. If you guys have been paying attention, you should be able to figure that out. All right, UJ, I don't really have much on UJ. Overall, UJ is bearish. I do think we're going to make a lower low. It's super, super strong right now. We have 4-hour 50 EMA on our side. We have the daily 50 EMA on our side. We are acting as dynamic resistance with this EMA. So I am looking for continuations lower. At this time, I have 2 levels. Well, this risk to reward is not this supply. This risk to reward, again, I just didn't want to have analysis drawn up to confuse you, but essentially that's where we originally sold it. And if you are a part of our VIP community, we talked about this when price was down in here back in December of last year. We wanted retracements into this level. We didn't get it for months and months and months. We finally did. Just because it doesn't hit the same day or the same week doesn't mean it's invalid. We just have to keep an eye on it and see, at this time when price finally does come up into it, is this still a valid trade? Well, yeah, this would just be acting as, buy side liquidity. We ran it. We're still overall bearish, lower low, lower high. This is still a valid supply. So we did get triggered into this trade. That's why we have this risk to reward. Stops are above the previous high here. And price actually came up into a lower time frame supply at that time. So we are trading this short. 125 is our overall level. Now, remember, we're looking for XXX JPY continuation short. So even though we have come up into that level, right, the overall supply, we have distributed. This is demand in here. We reacted. Demand in here, reacted. Demand in here, reacted. Failed to make a higher high within this trend and made the lower low. So at that time, we understood that because we made the lower low, having reacted off the level, this is our demand to supply flip, that last buying volume. So that is where we want overall pullbacks into. But what we can see here, and I'm just pulling trend lines. So this is the lower time. I'm not saying this could be a potential wedge formation, right? We could come up into here, go like this, bounce around, break out, entice buyers. Price could come up into that level that we want to sell it from. We sell it, and then price goes lower to take the stops, right? So that is something that could happen, right? Sweep liquidity before continuing lower. That's what we could see. However, that hasn't happened yet, and I don't know if it will. We have equal highs, so I want to see overall retracements. So if we get a break of structure, it doesn't mean we're supposed to be pulling back to just buy it long term. It just means we could be in for an overall retracement into our higher time frame supply level for overall shorts. But that hasn't happened yet. So who says we can't just continue to trade with the trend, right? Because we made a lower low here, lower high, lower low, lower high into supply, lower low. We could sweep this liquidity, buy to sell into our lower time frame supply here, and just continue to trade it short like that. As long as we have criteria to enter, that could be a potential opportunity. And then maybe at a later time, then it finally breaks and we pull back into our level for shorts. So, well, like I said before, continue to trade with the trend until it breaks, given you've built confluence and you have criteria. And I'm not just saying just because this is a high and this is a low, we just need to be waiting for pullbacks to just put a sell position on. That's not what I'm saying. I'm saying build confluences and trade with the overall direction. But if it breaks, that's okay. You know, you're eventually going to lose a trade eventually. Not going to be 100%. But then we understand that we broke, and now we can be looking for overall shorts from our higher time frame level. That's why I have these two levels there to keep an eye on. So you have that. Two more. AUD CAD is a little interesting, to say the least. We are. I'm not going to go over everything. Like I said before, you know, everyone who has taken my course, I did an hour-long deep dive into just this pair. Went over AUD CAD for, I think we talked about it back all the way back in here. From back in here to present time, I discussed literally everything about it. And I talked about it before on prior live sessions. But anyways, we're respecting demand, but we're also respecting supply. So we're kind of in a wedge in a sense. However, we've swept buy-side liquidity right here. You can see that. And we're falling into, well, we pushed up into a level of supply here, right? Because this was the buy to sell that swept higher time frame equal highs to the left. And then this was that expansion. We had the pullback. We failed to make a higher high here, and instead we made a lower low. So that turns into the supply. And then in the process, we came up, swept that high into that supply, and now we're falling, but we're still respecting demand. We accumulated into demand. And this was the repricing. You can see the lower low, lower high, lower low into a higher time frame level of demand, lower high, failed to make the lower low, higher high. And then it's just if we scale in here, that's the last selling volume. That's why we came into that level. So we can see we're respecting supply and demand. So what am I trying to get at here? Essentially, where's the current trend? The current trend is short. We have equal lows. So we're shorting. We're looking to short, but how do we know it's not going to go against us? Well, for one thing, we don't know. But two, we have an idea because first of all, we had equal lows, and two, within this counter trend that price accumulated within the higher time frame demand, this is the high that made this low. So lower low, lower high, failed, higher high. That's where we stopped the overall downtrend and broke to the upside. So I want price to come back down into at least 88345, preferably deeper into this imbalance. So we obviously haven't come into that yet. So current direction of trend is short. Higher time frame objective is here. That's why I'm looking for shorts. So equal lows, we know we're going to head short. It's just a matter of when, really. So I'm looking for shorts from our previous level of supply right in here. There is, I think it's 92632, just to continue with the trend. If it pulls back up into that level, great. We can continue to rally short. But right now, if we take a look at what's going on, we can see that we created, relatively equal highs right in here. We swept those equal highs, and now we're rallying lower. So this is not, in my opinion, this is not ready for shorts yet, just because I want to see that break, right? I want to see that clean break, and then we know that this counter trend is done, and then we can be looking for pullbacks to continue with the trend. Because then that would be, we're trading with the overall direction of trend. We swept equal highs, broke the counter trend structure, pull back into supply, short off into sell side liquidity and higher time frame objective. All right. So I'm not short right now. I mean, I am from our original levels, but that was, weeks and weeks ago. But I'm not in any shorts right now. I want to see more price action. I want to see a clear break. I want to see, we're shifting structure on the lower time frame back to the downside. I want to see pullbacks into an area of supply, and then I'll short it. Because at this current time, we're still bullish here. So technically, yeah, we could make another pass at the high and come higher. So nothing right now, but my overall bias is short. So I would highly recommend looking for shorts throughout the week. Not to say that you're going to find one. You have to just let the market come to you, right? Don't always get in the mood of, I have to be in a trade every single day, or I have to be in a trade every week. You only get into trades when the market presents opportunities, whether that be 20 million times a day or one time a year. Right? Obviously, I'm exaggerating, but you know what I mean. Go based on what the market gives you, not what you want to get. So that's my analysis on AUD CAD. Last one, Euro Swiss franc. So I want to continue to sell this. We are in a bearish market. You can see lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, looking for another lower low, just within this current direction of trend. You see this wick right here? That is where we swept. Not swept. Well, we did sweep liquidity, but more importantly, we came back up into this overall level of supply. Now we could have pushed deeper into that imbalance. We could have pushed higher, but when we broke structure to the downside, I looked back at why we stopped here, and I just went over to the left and saw that we just tapped into this last buying volume before the short. So just higher time frame. Anyways, let's take a look at what's going on here. And I know it's blurry. I'll zoom out in a second, but right here and right here, wedge pattern, break, entice buyers, price shorts off. Break and retest. Oh, nope, right back to the downside. You can see how retail gets screwed day in and day out. So that is why I'm liking shorts, because, we're overall bearish in the market. We've come up into at least just a general area of supply. We've created a wedge pattern to where we faked out retail traders long, break and retest. We failed to generate a higher high. Now we're forming lower lows and lower highs. So not only is the lower time frame bearish, but the higher time frame is as well. So let's just take a look. Let's go into the 1 hour time frame. Well, I'm not going to go into everything here. Essentially, we're just following the mitigation train. The supply here, the supply in here, supply in here, supply in here. You guys can see that all the way down. We're just making lower lows and lower highs. So what am I trying to get at? Well, we are in shorts at the moment from our two levels of supply here, right? Because this is the high that created this low. So we were looking for pullbacks. And we had a pullback. Where was it? Was it daily? Yeah. See this daily repricing right there? That was my first entry. First entry for shorts. And then my secondary entry right up here was on the lower time frame. And that was this level of supply right there, that repricing. So into premium price, we want to be selling at premium, buying at discounts. In this situation, we're selling at premium. So we had our two levels, boom, boom. And then we scale into a lower time frame, and we can see the distribution kind of forming, right? Distribution is forming here. High, low, I guess low here, and then we broke. So now I want to see pullbacks for now continuations lower, either into those two levels. So this was like, what was the other trade? I forget what was it? I forget which pair it was. But anyways, I prefer to trade from this level, but this is just a level of consolidation, so area of supply. So we could pull back up into there and continue short, but I would like to see that pull back into there. Regardless, stops above the high. So two levels, half risk each. If we scale into the 15-minute, we can clearly see high, low, high. So where's demand? Right here. Come into demand and failed to make the higher high, rallied lower. So that was that last swing high before the structure broke. So we came into demand. We then failed to make the higher high. We repriced and we continued lower. So this will turn into supply, which is why I have that level. So not only are we in shorts from our higher time frame regions of price from these two levels, we're also looking for retracements into our two levels of supply on a lower time frame to continue with the overall direction of trend. All right. So stops have been moved for these two positions, boom and boom, well, at least this position, stops have been moved above that high. This one here, well, actually, both of these positions, stops have been moved above that high. All right. All right, so that's all I have for you guys today. I'll stay on for any other questions. I do appreciate your time today. We are going to get out a little bit early. But remember, guys, if you're interested in just getting, to know the strategy more, if this really resonates with you, if you like the way I break down charts and want to learn more about how, I can teach you as a very simple approach to it, taking complex concepts and really dummying it down to follow just a very streamlined system, just go head over to my website, arielfxtrading.com. Just book a free call with me, right? Just would love to chit chat. If it's not for you, it's not for you. At least you know that. But if you are interested in really hitting it hard with mentorship and really getting to where you want to be in your trading and learning the right way, then I would love to speak to you more about how we can best help you. And of course, if it's not for you, then it's not for you. Then if it is, well, that's why we have that call to determine, and then we can go from there. Also, prop firm automation. If you guys are looking for easy ways to make money, prop firm automation would get you funded 100% guarantee or a full refund. That includes the challenge fee as well. And also we provide signals if you so wish to take them on the live account as well. So easy ways to just generate some passive income there. We do all the hard work for you. I wouldn't think about it as a form of, a high upfront investment. I would think about it in terms of a ROI, right? So you could spend $500 in the challenge. You could spend upwards, just depending on what tier you get and what package you get, $1,000 on the service to get signals and the funded account. It's $1,500. However, that's 1.5% of 100 grand. You can get 1.5% in a trade. My average trade is my average trade is probably 1 to 4, 1 to 5, but the minimum trade is a 1 to 3. So you hit a 1 to 3, boom, you double your investment right then and there with one trade. So I look at my investments as a form of, what kind of ROI could I see out of it? Not the upfront investment cost, right? Because people who cheap out on things are going to get cheap results. If you're looking for the cheapest way to make money, you're probably not going to make money. If you're looking for the cheapest course out there to teach you, probably very cheap value, right? Just like Grant Cardone said, there's information out there that you could spend 50 grand on to help you take the right steps to become a millionaire. But people aren't going to spend 50 grand. Why? They don't want to see 50 grand leave their bank, but they want to make $1 million spending $100. They want to spend $100 on something that's going to make them $1 million. Not going to happen. It's just not. So be smart, but also understand that most likely the investments that cost a lot are the ones that are producing more value. Not always, but potentially. All right, let's see. What time frame do you usually use for confirmation to take a trade? So I want to clear this up again. I get this question a lot. Time frame is subjective, right? I'm going to share my screen here. So this is a really good question that I want everyone to fully understand. What is the current price of Euro Chef right now? 98885, right? Is that price the same for you? Is that price the same for my neighbor next door? Is that price the same for a guy living in Syria? Of course, it's the same price. Euro Chef is exchanging right now at 0.98885. It is being delivered one way, which means timeframes are subjective. They don't matter. There's no specific time frame that's going to tell you, oh, I look at the 15-minute because that's going to give me the entry, but the 10 minutes going to show me something completely different. No, price is price. Order flow is order flow. It's this area here. I can look at it from the daily time frame right here. It's still a valid level. I look at it from the 1 hour. It's still a valid level. I look at it from the 15-minute. It's still a valid. It's the same supply level. It's just zoomed in and zoomed out versions of it. So there is no specific time frame that I trade. I look at all the time frames because I build my confluence and my directional bias off of the higher and lower time frames. So I'm not just looking at one time frame. I'll look at if I'm scaling into a level, like for instance, USD CAD, from this original level that we had here, let's use bar replay, I go down to the 8-minute and it shows more clear selling volume. You can see the demand clearly, the sell to buy, rather than the 10-minute. Doesn't look as pretty, right? That doesn't mean I trade the 8-minute. It just means that it looks prettier on the 8 minutes. So I'm just scaling in and out to see what looks the best, right? Based upon my understanding that we swept liquidity, right? From a higher time frame perspective, we swept liquidity in here, sell to buy, we broke structure, right time of day, pulling back into the last selling volume. Doesn't matter what time frame you look at it. If this is valid no matter what time frame. 8 minute, 9 minute, 25 minute, 37.5 minute. I mean, it doesn't matter what time frame you look at. So you have to just keep zooming in and out and looking at the different perspectives, right? So that's why time frame just doesn't matter at all. Hopefully that makes sense. I just wanted to clarify that because a lot of people ask what time frame I use. I don't use a specific time frame because it's all subjective. Could you explain some criteria of your entry? I think I did. I mean, if you've been paying attention throughout the whole live session, I have. If you guys are looking for like straight up answers to all your problems with trading, it's not going to come in one specific sentence. I'm not just going to tell you, oh, here's the criteria for entry. Boom, there you go. You just made $1 million. I've been going over all of this. If you're looking for something easy, you're not going to find it. But if you want a guide, then I would highly suggest mentorship because you're not going to be able to find someone who's going to say, here's my criteria for entry. Boom, it's going to work every time. You're going to make $1 million. You know what I mean? So, I mean, based upon everything that I was going over, it's all about, higher time frame analysis, overall direction of trend, scaling in, looking at supply and demand levels, looking at time and price, liquidity runs, all that stuff combined together is my criteria for entry. All the stuff I went over, and it's going to be different every time. It's not going to be, because I think people, what they do is when they ask me questions, I feel like they think that there's only one answer to it. And it's that particular answer is going to work every single solitary time. The concepts will forever be the same, right? So concepts aren't going anywhere. Liquidity runs will always be there, but it's going to look different every single time. So that's why I can't say, okay, here's exactly how you need to go about taking an entry, because it's going to be different every time and just based upon the different setups. So let's see. I would love to know, guys, why do you guys love trading gold so much? I would love to know that. If someone can provide an answer, that'd be awesome. Why do you guys love gold so much? How do you decide on full risk stop loss rather than half risk? So like a position on full risk or half risk, it just depends. It depends on a lot of things. If I'm looking to sell GBP JPY, well, am I already in Euro JPY shorts or CAD JPY shorts or Chef? I mean, if I am, then I probably need to reduce my inherent risk in the market and then place a half risk position. If all of my confluences are there and it's a beautiful setup, then maybe I'll place a full risk on it, meaning 1%. But if it's like, if it looks good, if it's, if it meets my rules and everything, but I'm just so with it, then maybe half risk. It's very hard to determine it just based upon the individual setup. What I would recommend doing, guys, don't even look at it from a half risk to full risk perspective. If you have multiple levels, then yeah, you have to split up your risk. But I would just be consistent with it. Whatever you risk, whether that be a 0.5% a trade or 1% a trade, do that for every single trade. It just make it easy. That's what I would do. Let's see. I knew it. I knew it. Gold. You guys love trading because gold moves fast. Okay. Let me show you why that is not the right way to think about it. And it's not me going, if you love trading gold, fine. I mean, I have nothing against it. However, if you're looking to buy gold, right? Actually, let's just go to gold right now. I'm not going to break it down because, again, I don't trade it, so I have no idea how it moves. I'm not in tune with it. So this is gold, right? So let's just say you're looking to buy it. Let's say we're looking to buy here. You love trading gold because it moves fast. Okay, so and it pumps out a lot of pips. So let's just say, oh, okay, if I buy it here and up to the previous high, oh, boom, I've made 480 pips. Okay, well, just because it's 480 pips to one direction, what about your stop loss? just because it moves a lot of pips in one direction, it also moves the same amount in the opposite direction. It's just 270 pips, right? So just because it moved, people love to trade cryptos and gold and US 30 because it pumps out a lot of pips and you think, oh, I can make more money with it. That's absolutely incorrect because it can do the exact same thing in the opposite direction of your trade. Pumps pips in your right direction, great. Pumps pips in the opposite direction, uh-oh. You know what I mean? It's all based upon how in tune you are with the market. Everyone loves trading gold. And I think a lot of people, just don't understand just the basics of trading. It's not about pips. It's not about how fast it's moving. It's about the setup, the understanding of what's happening, and percentages, right? Because so what? I could trade this, let's just say like right there, or let's just make it simple. 1 to 3. This is a 1 to 3, 3%. Boom, I've just made 712 pips. Cool. Awesome. Now let's go to something like AUD CAD. Okay, cool. I have a 1 to 3, and I've only made, well, that's not a good example. AUD CAD. Let's just do this. Let's say I traded this right here. I'm just going to make this. Let's just go 1 to 3 on this one, right? Actually, I'm just going to make this up, right? Stop losses right there. Take profits right there. 1 to 3. Okay. Okay. In this situation, let's just say this was your trade. So congrats, you made 700 pips on gold. You made a 1 to 3. Well, I only made 121 pips on AUD CAD, and I made a 1 to 3. Who made more money? We each made the same amount of money. So people think, oh, it moves fast. Oh, it pumps more pips. It's not about that at all, which is why I think people get the misconception that they should be trading gold because they think they can make more money off of it. US 30, that has nothing to do with it. Absolutely nothing to do with it. You can make money trading AUD NZD that moves 30 pips a day because it's based upon percentages of your trade and not pips. Because what people do is they think, oh, I can make 700 pips on this trade because they're arbitrarily taking ridiculous amount of risk because they're just placing whatever lot size they want and they're not basing it upon actual percentage risk. So if you love trading gold, I have nothing against it. More power to you. I don't trade it. I don't like it. I won't go over it. But I just want to clear that misconception up and guide you in the right direction. Because if you trade gold for those reasons, you're not trading gold for the right reasons. All right, what other questions we have? This is all I have, guys. So if you're good to go, you feel free to hop off. I'll take some more questions if you guys have any. Let's see. Anything else? Tim, yeah, I didn't go over EU. I don't like it right now. It's not really doing much. It's just sort of consolidating higher time frame right now. Just very choppy. If you take a look at it from like the hourly or 4-hour time frame, you can see it's taking buy side liquidity, then sell side liquidity, then buy side liquidity, then sell side again. It's just not at a point to be trading right now. I went over, let's see, GU. Did I go over GU? I don't think that was one of my pairs. No, it was not. EU is not, and then obviously gold. I don't do gold, guys. Come on. Yeah, you're right, Tim. It doesn't look good right now. EU kind of looks gross. Thinking about, remember if you guys were on last live session, we talked about psychology. Remember, I said that I would look into that for you guys. I'm thinking about holding one maybe next weekend. I don't know. Would you like it in lieu of a cancellation of our typical live session, or do you want it in addition to what we already have? Do you want a psychology live session next Saturday at 10 a.m. Eastern, or do you want to still have these live sessions where I go over charts and then have the psychology one at another time? I'm thinking the latter over the former, but I want to get your guys' opinion. I'm in talks with Cam about it. I think it would be good. But guys, just imagine this for a second. Imagine this. Imagine I tell you which is true, that we guarantee funded accounts, right? All you got to do is just take the leap of faith and just get set up. Literally get a funded account guaranteed. And then everything that I've been sending out and talking about with you guys, it's not just analysis that I'll be going over. It's actual trades that I personally placed on my personal account, on my trading account that I'm sending to you guys in the form of signals for your funded account that you don't have to do any work for. I think it's a pretty good deal. So if that's something you're interested in, let me know. I'll be happy to set you guys up. We're getting ready to rock and roll come Monday with the signals. So hopefully going to be starting to make some really good money for everyone. As long as you guys use good risk management, you're going to be fine. Okay. Take it easy, take it slow. We're overall profitable at the end of each month. You guys haven't seen the track record. It's right here, right on the screen. I can send you guys the link to it if you want. You can track all the trades that we send into our VIP Trade Ideas group. They're not signals, they're just analysis, but I track it just to show you guys the data. And if you were to take every trade as a signal, which we don't do in our VIP just because we condone good trading behavior and the learning of the skill set. So that's why we don't send signals in our VIP group. But if you were to take them as that, then I do track all of those as if they were taken as signals. So at the end of each month, we are profitable. If you use good risk management, if you follow along, if you're, you can just use your brain, you're going to be fine. Okay. I just want to do it on my own. I'm still, yeah, definitely. That's awesome. I commend you for that, Tim. That's good. I prefer you guys to do that. I prefer you guys to want to do it on your own. But if you are in need of help and want a little, easy way to make some money, then that's why we have that option. What pairs do you actually trade in your account? That's a good question. I don't trade all these pairs, guys. If you guys think I do, I don't. I look at all of them because obviously we have a community of traders who trades different pairs. I mean, I have some people trading, GN and some people trading EU. Well, I got to look at all of them because I have to help people. And I love trading Forex because I know Forex. I know currencies and the way they move. I don't like gold. I don't like US 30. That's why I don't trade them. Currencies I do. I love. So my personal account, I trade the majors, ACAD, NCAD, ASHEF, and NCHEF. But what I'll do sometimes is I will post on, if you've seen my story, you've probably seen all the entries that we've talked about. So let's just say, for instance, on something like, GBP AUD that I don't typically trade at all. Even if I have analysis on it, if it ends up going in our direction based upon an entry that we talked about, I'll just place that on a demo account and then post it to the story just to show you guys the concept, to show you guys that this was the entry. Even so, it wasn't a real entry because I don't trade it, but other people could trade it. If that makes sense. I try to specialize, with just a few pairs, 5 to 6 to 7 pairs. I would first start off by looking at maybe anywhere between 5 to 10 pairs, and then as you get to know them, you can kind of bring them down to maybe 3 to 5 at max. All right. Alrighty, I think that's all we have, guys. All right, well, take care. Have a good rest of your day. Enjoy your weekend. Get some rest. And we will talk to you all Wednesday. For those of you who are not in VIP, we'll talk to you on Wednesday on the live session. And for those of you in VIP, we'll talk to you on Monday. Stay tuned for the Smart Money Sundays episode that will be released tomorrow evening. And have a good rest of your weekend. Take care, guys.